are we in an AI bubble? The world is changing. The sand, literally the sand, because like the semiconductors are made out of sand, right? The sands are shifting, and you don't want to get caught with your pants down.
Yeah, yeah. You know what this reminds me of? A little bit of, I mean, I guess that's the intention of like, what the people in France during the French Revolution were thinking. Like the aristocrats, everything's fine, everything's fine,
But so
until
let's
until everything is not fine.
yeah, yeah. Well, let's look at. I said at the top of the episode, right? A couple of super investors, inverted commas, at least famous investing folk, are making some fairly big moves, and like I made my changes before I saw any of this stuff, but it does it does give me not pause for thought. It does kind of encourage me that I'm thinking in the right direction with going a bit risk off. But in the last probably what 2 or 3 trading days, we have seen Michael Barry declaring that he has over $1 billion set of put options on Nvidia and Palantir. And then you've also got Palantir co-founder Peter Thiel has sold his entire stake in Nvidia and the large majority of his Tesla holdings. And then also like Masayoshi Son, SoftBank, they've sold their whole stake in Nvidia for nearly $6 billion 6 days ago. Like we're recording on the 17th of November. So like mid-November, you got a couple of quite prolific folk there who are, I know Barry's always been a bear, but Thiel and SoftBank definitely not. So the fact that they are, I don't know if they're short the market or they're just basically like releasing capital from these like big AI stocks, predominantly Nvidia. That's the one that crops up in all 3 of those stories. That's kind of telling, I think.
Well, telling. Okay, let me offer the counter view on that. And by the way, I think my own position is quite ambivalent. I think I will say at the end where I ultimately land, but I am definitely not in a binary. I'm not looking at this in a binary way. Just let me state that up front.
And maybe just for the purpose of this, let me say as well, like I'm also, if anything, I'm probably an AI bull. Like we'll talk about what I've done and why. It's not because I'm bearish on AI. But yeah, so let's explore the bull and the bear case. I think there are strong arguments on both sides.
Yeah. So, but the thing you just said, here's the caveat I want to lay out front. This is a little bit from I would call the medium term players in the market, the short medium term players. Those guys, that game pays very careful attention to inflows and outflows of capital, and it's kind of price centric first. And over the years, what I've learned, and I think I really believe this, it's not even that I believe it, I've seen it with my own eyes. What retail investors forget is that any fund with billions of dollars in assets or hundreds of millions can kind of make the price go where they want it to go. And that's hard to accept for retail, right? Because when we make a trade, it literally will not ever affect the price at all. But we know this is a kind of Machiavellian space where people are always trying to do things for their advantage. And one of the core playbook moves is when there's fear, when these big guys sense fear, they deliberately try to drive the price down by selling or doing whatever fancy shenanigans to do that, using options and derivatives and whatnot. Therefore, in a sense, confirming that the fear is legitimate, right? And all of a sudden, the retail investor sees over like what we experienced last week, prices dropping 6% one day, 7% the next day, right? Then the short-term traders get their stop limits hit. That forces more selling. And now you have real panic, right? That's what the retail investor feels, sees, and they all of a sudden start selling. You know what the big boys are doing? They're like rubbing their hands in glee, saying mission accomplished. We got exactly what we wanted. We wanted these shares of, call it Iron Energy, but all of a sudden it got to 80 a share. We know that's too high. We're going to drive it back down to, at the moment, 49. We get all these cells, and now we're going to load up heavy with like long-term options or whatever, so that when it inevitably rebounds, they're going to make their hundreds of millions, and retail, as usual, bought high, sold low, and so goes the game. That's one view. That's kind of cynical, but I think it's more true than not. What do you say to that?
Yeah, I think that's some of it. I don't think that's like the overriding thing. And probably that's more in like smaller companies like Iron, where if you've got like a couple of $1 billion, you can't move like a stock like Nvidia. But you can absolutely move like, sub $10 billion companies. And you can do that by, also by writing like short reports and doing all sorts of other, supposedly market transparency, but also like verging on market manipulation type things. So it's a factor. But is it like the main factor? I don't know. Like, it feels to me like...
Well, Badger, actually, sorry, let me say one thing. It's not, let's not think like main or not main, because it's a confluence, right? It's a complex system. So there's lots of things. I think all I'm trying to say in terms of education is, and this stands no matter what degree of it is, the short-term price that you're seeing is very likely a short-term way to psych you out of a position based on fear principles. And if you have done your work, don't fall for that particular gimmick on its own, just on what the price is telling you. That's all I'm saying. And it's part of the game.
That's there. Like it's easy in some ways to protect yourself against all of this stuff. And it's just about like the things we talk about every episode, about being in the mastery of your emotions, having a plan, not reacting to what's going on, trying to take a long-term view, unless you're doing like deliberately doing short-term things. Take a long-term view, like ignore the next year, the next 2 years. If you can do that, you're kind of immune from these kind of factors. You can't ignore everything, right? There are some fundamental things happening in the world which will probably influence, like, say, the 5-year horizon for a lot of these US tech companies that are grounded in AI. And frankly, we don't know how these things are going to play out. And I can see supporting forces that are going to continue to push valuations for these companies up and up and up. And I can see like a lot of rugs that could be pulled out.
Yeah, so shall we talk about let's get into the what we're seeing in this moment, right? After this weekend where there's all these big boys selling out, and you want to take the bear case? You want to talk about first like why things look kind of scary?
Yeah. There's a bunch of things. Like, I don't know which order to tackle these in, but let's just hit like one of them because I think it's quite interesting. And it's just like this incredible level of CapEx spend, like basically money that Alphabet, Meta, Amazon, all of these guys are spending on AI hardware. And like, if I really pare it back, like there's literally like some of these companies are committing essentially like trillions of dollars over the next couple of years in buying hardware. And there's a couple of things that could go wrong with that, right? We had like the DeepSeek moment like a year ago when we all panicked about NVIDIA a little bit. We did a whole episode on that because it looked like, oh, there's these other models. You don't need these masses, like huge data centers and masses of semiconductors and chips and GPUs to do AI. You can do it with really highly efficient models. And a lot of these models are coming out of like Chinese labs. So maybe the Metas and co are spending a ton of money and they don't need to. And then another sort of related to that same point is they're spending all this money, and it's not like you've bought, say, like, I don't know, like a car, and it sits in your driveway and you use that car for like 10 years, and at the end, you know, you sell it into the secondhand market and you buy like another car. Like, they're spending this money on technology, which is sort of subject to two quite difficult forces. One is the depreciation is so rapid for like if you want to buy like cutting edge hardware from Nvidia, but it's only going to be cutting edge for like 6 months to a year, and there's like another generation coming down the track, and you need like the next thing. You don't need this old thing because it's basically like it just doesn't cut the mustard. And obviously in a data center, and you have like a massive thing, you have all of, you know, if your older generations and you have to use generations, and you continuously try to manage the cycle. But like the useful life of some of this investment is actually probably relatively short compared to a lot of other capex investment. And I haven't done any like fundamental research on this, but the other thing that's dangerous with this stuff is like the workloads running through GPUs are really intensive, and they run really hot. And so actually these chips can essentially like burn themselves out. And that happens to some degree. Like there's some percentage failure every, 1,000 hours of usage. But maybe we are seeing a higher level of degradation in some of this hardware. And so what does all that amount to? Like, A, are these companies spending too much money? And B, is the money that they've spent actually going to be useful for that long, and they have to just continually spend trillions of dollars?
Right, which obviously they won't have. You can't keep, they're not making trillions of dollars. I mean, as much money as Meta and Google and all these companies make, I mean, it's massive, right? There are caps, right? There are limits to too much. There's something called too much. I don't know. That point, it's concerning to some degree for me. But I kind of feel at some point maybe there's going to be a plateau. And mind you, this is a non-expert's opinion. I could be completely wrong about this. But just because, the rate of improvement with the GPUs was so stratospheric up to now, does not mean that necessarily the next generations will continue to have to increase so much that the older GPUs from, like, as you said, 6 months or a year ago are now like useless. I mean, that exponential curve is steep, but at some point it's good enough, or it's plenty good enough. I mean, I know this is an imperfect analogy, but the MacBook Pro that I bought, that I'm using now, when I bought it in 2021, I decided to get the complete, maxed out chips, the M1 Max Pro version, whatever. 4 years later, almost 5. And this computer is still shockingly powerful, that it's running multiple screens and doing all these things. In computer years, that's a long, long time, right? 5 years. As imperfect as that analogy is, let's say you buy one of these Blackwell whatevers today for an obscene amount of money. The AI tasks, I mean, maybe they won't be good enough, say, to run a fleet of cars, because those always need the fastest, quickest, but to run inferencing and to run, whatever training models, even if it costs you half a millisecond, So I'm guessing there's going to be a plateau, and you won't need to deprecate all of it. That's a fee. It sounds scary, but
Yeah, I don't think this stuff becomes like instantly valueless overnight. Like, it will be scaled down, it'll be used for other things, but like the peak demands are just increasing. Like every time, like Gemini, really, there's a new like Gemini model or ChatGPT 5 and Pro versions, and now we're going into like agentic AI, which is like a massive like paradigm shift. No, AI is no longer going to be about like asking questions and getting answers. It's going to be about AI doing stuff for you. And you may give it a task and it might have to go away and work on that for like a day and come back to you, check in with you, get more information. And then like it's achieved your goal, whatever that thing was, some huge piece of research, maybe, furnishing the house you just bought. Like these are legitimate tasks that we will use AI for. And so, like the demand is going to be increasingly high. And so that's like a bull case, actually, because, there's real economic value of AI doing real stuff that we will all find useful and the customers, these companies will find useful. But it's also a kind of, not so much a bear case, but it's also like another reason why this CapEx spend has to just continue and continue.
Yeah. So, okay. So on this point, I'm saying because of the massive, massive increases in power and speed for the last however many years that the chips have just been being upgraded over and over again, they've become good enough and they're going to stay good enough for much longer than the bears say, where you'll need to update to the latest thing or your previous stuff is garbage. So I'm not buying that bear case exactly. I think that the pace will just be much slower and more manageable. All right, so what's next?
Well, it's like, I think this is the core argument now, right? So we're spending a crap ton of money on this stuff. And really the core argument is like anything, right? You make an investment in something and you expect to get some kind of return out of it. Like I buy a car, I expect it to be able to take me to the shops and take me on vacation and like, play like video games at Tesla and have Tron mode and do widget, right? So we're spending, as a society, these tech companies are spending a ton of cash on AI infrastructure. Like it's kind of doing fun stuff, and there's certainly signs like we're getting real economic value out of these tools, but will the economic value ever kind of reach the point that it justifies that crazy ongoing level of investment? Like I think that's a legitimate question mark. And to me, that's like the big rug. That's the big one where, Meta spend trillions of dollars of capex on AI, and they then make these capabilities available to like their users on Facebook and Instagram and WhatsApp, and maybe they sell some like cloud type stuff. They don't really do that, but maybe they do that in the future. But if they can't recoup and make a profit on like the investment they made, then that's a pretty flawed business model. And that, it's a bit extra on that. Like you might say, well, obviously then that's done. Like they wouldn't, as soon as they realize you can't make enough money out of this stuff, they're going to slow down their spending. But they're not, because of this other factor of AGI, artificial general intelligence, and like very clearly Zuckerberg, that probably to a similar extent the other leaders of these competing companies, like these guys believe whoever hits AGI first is going to potentially be in like a winner-take-all situation, because they'll then accelerate past everybody else and be almost uncatchable. And so for that reason alone, that in Zook's mind, I don't know the guy, obviously, but in his mind, I can see like he's a real technologist and he's a real futurist in the way he navigates Meta and their strategy. And well, that alone would be justification, I think, for him to spend at all costs. But if they don't win that race, or if it's actually like a false race, like AGI isn't to be found in the direction we're going, or then then they are going to spend anyway, even if they're essentially like losing money on every bit of like data center chip that they buy. So that could be trouble. I'm not pointing a finger at Meta particularly, but this same argument I think potentially applies to like all of the big guys, including Tesla, right? Including Tesla.
You mentioned Tesla, and that's interesting because I think one of Musk's recent tweets was him talking about the way the Optimus robots are going to, become the world's best surgeons. And it's straight out of sci-fi stuff. And we know Musk is a salesman and a showman. And simultaneously, he also has built the most staggering technologies in human history. So in some sense, Badge, this kind of feels to me like a almost like I don't want to say binary, but two paths diverge in the woods. And one, you say you just don't believe. You can't believe. You can't allow yourself to believe that these kinds of technologies are possible. Robots curing diseases. And on the other hand, you have people seemingly far along already on the path to actually making them a reality.
I mean, let's just as well, because I think you're making a really good point. It's a kind of a bad example with robots doing surgery, because there's a whole bunch of reasons why that will be one of the last things robots will do, as in autonomously. But there's a whole bunch of very valuable things that like Optimus robots will do as soon as they're in the general public or in warehouses or on Mars, there'll be decades where they're doing a lot of really useful stuff.
Right. Okay. So, but the same point goes, and I think for me the bear bull issue case with this is not so much will these things ever happen. I'm a bull and an optimist in that sense. I think the fundamental question is, will it happen soon enough so that the financial balance sheet doesn't explode? I think is where I'm at. You know what I'm saying? And that the companies need to start recouping some of these investments a little bit sooner than later.